Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, March 25th, 5:23 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight with a new headset and upgraded microphone today. Hopefully, the sound quality ends up what I'm expecting it to be. So, state of the market, we're in an uptrend since the follow through days back on November 1st and 2nd. You can see the trend gauge over here. We've got the coveted 4 green arrows, which means market leadership acting just fine bullishly, and all 5 of the major indexes above the 3 timeframes that we track, that being the short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. So what happened today? Second straight day of tight action, tight chop. Today, we at least had the benefit of the dollar showing a little bit of weakness and leaders acting just fine. So we've been talking about levels since the breakout of the Fed, and as long as we continue to hold that breakout, we're in the camp that we're looking for quality stocks at low risk entry points. Here are the numbers on the day. The Big Seven down 0.40%. RG8, like to see this up, especially when it's led by FFTY and ARK-K, as those are the risk-on/leadership 2 ETFs that are in the 8 growth ETF composite that we track every day. The 8 composite up 0.16%. S&P 500 opened down 1/3%, closed just about the same place after just chopping all day around. Equal weight down 0.22%. NASDAQ 100 down 0.36. Equal weight down 0.25. Dow down 0.4. Mid caps just barely negative. Russell 2000 up 0.1%. This was green pretty much all day. Global 60/40 down 0.20%. In-house GROTECTION up 0.13%. Bit of a disappointment. We were up over 0.5% for quite a bit of the session. Let's get into the charts, and then the tail of the tape will start off as we always do with the S&P 500. And you can see the second straight day, tight range, gentle pullback. Let's go to a 15-minute chart. This is the exhaustion gap here. This was the Thursday after the Fed. Here's the strong close on the Fed, exhaustion gap, fade into the close. Next day, open basically unchanged, close very close to there today. Gap down 1/3%, another tight range, little fade into the close. 5174 is this key level we're mentioning. Let's really call it 5174 to 5190. That's a perfectly normal pullback if that's what continues to happen. It's if we get back into this chop down here in this area that we start getting concerned that we may see some more corrective action. So there's the S&P 500. Let's go to the NASDAQ 100 and bounced early at the 8-day exponential moving average. Second day, actually the first day we were positive on Friday on the NASDAQ. It's been showing minor relative strength, as you can see here last week. Not today, down slightly more than the S&P, but some minor relative strength late last week. Let's go to the Dow. Dow down 0.41%. Second day of a pullback right to the 8-day exponential moving average. Mid caps, these lagged on Friday, close at the bottom of the range today, but still okay. The MDY, the ETF, closed slightly positive, while the index itself was slightly negative. There's always a minor disconnect between the ETFs and what the index actually does. It just depends when the bell exactly rings and what the last, whether it's sold on the bid or the ask. But still nicely above the 8-day exponential moving average, normal pullback after the move up. IWM, positive today, lower end of the range, still holding the 8-day exponential moving average after very similar action as far as Thursday, euphoric move higher off of the FOMC, Friday pullback, and not falling through to the upside today, but not giving up to the downside either. All right, let's go to the VIX. VIX continues, closed at the lows of the day, but still up 1%. The dollar, we liked what we saw today. We need to see more of it. This is the dollar index. This is not correct. Why is this showing that it's up today? Let's go to the UUP. Dollar was down today by 1/4%. And it had been breaking higher for 2 days since the Fed last Thursday and Friday. We don't want that to continue to happen. That's been a very clear headwind for stocks. So happy to see that pullback. Want to see more of that actually as the week progresses. Only 3 trading days left in the month as we're closed Friday for Good Friday. Okay, so that's the dollar. Let's go to gold, up 0.32% today. Gold stocks up 0.78%. Bitcoin was the mover on the day. A little bit of weakness late last week, not today, up 11.4%, approaching those recent all-time highs. Now on to bonds. Bonds were collectively down in price today, meaning yield up slightly. Nothing dramatic, however. Broad bond index down 0.2%. Long bond TLT down 0.5%. The yield on the 30-year up 0.77, and on the 10-year up as well. All right, that is the inter-asset correlation that we discuss in every video. Let's go to the tail of the tape. Something from a news standpoint to pay attention to. While the market is closed on Friday for Good Friday, the government is still releasing this PCE inflation data report. So any reaction in the market is going to be delayed. I believe that there will still be some futures trading, so that'll give us an idea of what the reaction actually is to the data, but the market itself is closed on Friday. Day count, 2 up, 2-day consolidation, 6-day above the 8-day exponential moving average. And this is not correct. It's why do I keep over typing that? 53 days, not 3 days, 53 days above the 21-day moving average and 96 out of 97. Our expectations remaining positive with us being above the 21-day moving average on the S&P and the NASDAQ 100. As I said, pretty much type chop on the day. On the upside, Bitcoin, gold, gold and silver stocks, oils and utilities. On the downside, industrials, tech, biotech, retail, and transports. As far as the portfolio goes, one new buy today, that being ARM, came out of the gate strong, then just kind of chopped around sideways. We added to MU. Reminder, we bought on Thursday, got shaken out on Friday. It closed strong on Friday and followed through to the upside. So we added some of that back today. Also added a little bit to Nutanix as it was showing some strength. And we did offensive selling on NRGU. NRGU has spent like 10 sessions between the +3 and the +4 ATR. And we cashed that in today for like a 32% gain, I think, on the remaining half size of the position. So net, our exposure went from 1.40 to 1.44. Bottom line on the day, tight range consolidation again with the dollar down and leaders just fine. Nothing to be concerned about from where we're sitting, again, unless this FOMC breakout fails. All right, let's look at a couple charts. We'll start off with MU, which we added back to today, and you can see the strength there, finishing off the highs, but very nice follow through. So basically, this is looking like a big shakeout Friday morning, then some strength, and then more follow through strength today. ARM holdings gapped up, closed near the bottom of the range, but held the gains, at least 3% of the gains. NVIDIA strong again today, but faded a bit into the close, up 0.76%. That's still an all-time closing high, another all-time closing high. SMCI also came running out of the gate strong, back above that 1,000 level, holding the 21-day and recapturing the 8-day exponential moving average. Let's see, also strong today, IoT. That was an earnings gapper that then had 3 ugly down days, but trying to regain some leadership qualities with Bitcoin being up. Coin had a huge day, another high close off of this recent move up. Anything else that stood out that we want to talk about? Square trades choppy, but an update today up 2.3%. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. On Twitter over the weekend, I put out, well, first an announcement. We're happy to report late last week, we topped $150 million in assets under management. So love to see that. And it's a testament to the fact that investors like the idea of being able to do trend following and not have to stay stuck in the market all the time. But when the market turns unfavorable, that their advisor has an active approach to protect the gains that we got in an uptrend. It's unfortunate. Usually we get the most new clients come in after people get their butt kicked in a harsh pullback and they come across us. But really, the time to move to Revere is when your account is doing well, because under the pie chart asset allocation, traditional advisor, you'll just give that all back during the next bear market, but not with our risk management approach to it. So, I know a lot of traders follow us, but you've got friends and you've got family that probably have money with advisors or manage it themselves and really don't have an idea of how to protect themselves during bear markets. So send them our way. We'd love to talk to them. If you're interested in becoming a client, my partner, Dan Stewart, is at dan@revereasset.com. Phone's 855-REAL-WEALTH. That's 855-732-5932. The website, revereasset.com. On YouTube, Revere Asset. We continue to hit highs in subscribers, and we appreciate if you like and subscribe and pass it on. That's going to wrap it for the Monday video ending the trading day, March 25th, 2024. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.